This meeting is being recorded.
Good evening, good morning, whenever you are. This is the second part of Become cTrader Master webinar. Just a little bit, just a few minutes after 8 p.m. Welcome everyone. Welcome. Hello again. We are going to do some nice training today. Let me just try to. There you go. This is the webinar chat. I will just say hello to you. Hello, everyone. If you would like to say something, if you would like to write something to me, if anything will be not quite clear, just write it on the chat, and I will try to answer my best. So let me just show you my screen, and we will continue with TopFX cTrader mastery, basically for tonight. This is the second part of the 4 parts altogether webinar for the TopFX. So let me just show you my screen. Where is my screen? There you go. So okay, this is it, and yeah, I got it. I will share with you my screen, and we are back to the cTrader. Can you write on the chat if everything is okay? Can you hear me correctly before we start? Can you see my screen? You should see the cTrader logged into the TopFX broker. So is everything okay? Just let me know. I will just switch to the chat right now. Can you write it on the chat? Yes, cleared. Okay, everything is okay. You can write it on a question and answer field. I don't actually care. It's basically up to you. So thank you very much. So let me just okay, yes, it's clear. You can clearly see. Okay, just a confirmation. Very well, very well. Thank you very much for giving me the green light to start our webinar. So let me just recap what we've done last time. We've been talking about some interesting features of the cTrader. Of course, we talk about this panel on the left arm side, which is the trade panel. Basically, you got the trade panel, and you got the copy panel, which is this one. Of course, we will have a separate webinar about the copy trading in TopFX using the cTrader. Stay tuned, but not today, not tonight. Analyze, of course, this is the cTrader Automate, all-inclusive algorithmic trading solution for all of you who like to trade using bots, using expert advisors, and the other stuff like this. And you got, of course, the live chat, partner cabinet, you got the deposit withdrawal section, settings, and the help center. But we will focus on a trade, as you can see here. Then central window, of course, is a chart. You got my, as you can see, you got my, they call it trade watch section here. I got open a trade of the on the cable, British pound to American dollar, which is now $1,000 in profit. Why? I will show you in a minute why I'm doing this exactly. And of course, right hand side, we talk about it. There is everything else you need to know about the other features of the cTrader. You got, of course, the symbol. Under the symbol, you got depth of the market, trading center, auto charts. We're gonna talk about it later on. Calendar, symbol, info. So everything, as you can see, related to the symbol in our example. This is the British pound to American dollar. Of course, how much is the P position, what's the lot size, what's the commission, and stuff like this, everything, including swaps. Inverted rate, market hours, trade statistics, leverage. We are going to talk about it as well. You got the DOM, you got the calendar, you got the auto charts, and you got the news windows here. So let's focus on this, what we got here. So that was just a quick recap. Let's just focus on what we actually have in the front of our eyes. So we got the chart of the British pound, and as you remember, we've been talking about the orders. The orders are listed here under the menu called new order. If you would like to place an order, of course, now you know how to do it. That's one of the many ways to place an order. As we know already, we can of course click here on the new order window, and we got the same panel here. So I'm not going to blur the screen. Let's just stick to this panel here. So we've been talking about different kinds of orders. Are they listed here? Yes, there you go. You have the market order, you have the limit order, you have the stop order and stop limit order. So the situation here is, of course, that you can use any of these order types. Let me just have a quick look if we have any questions. There you go. I got like 2 questions here. Let me just take a look. Okay. This is it. Let me just erase them. Okay, so there is no questions. Fine, no questions. Right. So the question right now regarding the trades basically and the market orders and generally the new orders is why there are 4 of them, and that was explained last time, and this is where we finished. Why there are 4 different orders, and right now I would like to speak about when to use it. So I would like to show you something very practical for every trader, because there is sometimes a lot of confusion when you should use the order, right? And how actually you can use the orders during your trading. So let's just start with the basic order, which is the market order. As you can see here, if I click on sell on buy, of course, I'm going to place a trade on, in our example, this is a cable British pound to American dollar, and I got my quantity. Let's say I will trade mini lots. Mini lot is 0.1 of the lot, which means if one lot is 100 units of the currency, I'm talking about the currency because you can have your account deposit in of course euro, you can have your account deposit in American dollar, British pound, and so on. So 100,000 units of the currency is one lot. So one mini lot is of course 10,000 units of the currency. And if you hover your let's say mouse, your indicator here, in about 1 second you will see a very interesting information regarding the trade that you are about to make. So you have the pip value. So as you can see in my situation, my pip value, if I will place this trade, will be $1. So I hope everyone knows what it means, the pip value. Let me just explain briefly that every market movement of 1 pip up or down will be equal to $1. So you have, of course, the trade value on a buy side, trade value on the sell side, and the commission required is, as you can see, 27 cents. And margin requirements for the buy position, $22.71, and my margin available is over $10,000, so I can easily trade one mini lot on the British pound. So that's the basic statistics that is placed directly over the quantity window. As you can see, I moved my cursor and then I go back, and you can see it pops back on. So one mini lot, I can do this. So let's do, of course, the sell position. So if you want to buy, you click here. If you want to sell, you click here. And because for the educational purposes, let me just continue with buy, because it's easy to understand for everyone how the buy works. So if I click on the buy, as you can see, I'm going to let's say we are not going to use the take profit and stop loss. I will open the trade of 1 mini lot straight on for the price that is being seen here. So let me just click the buy side. Okay, this is the buy, and I'm going to place my order right now. 1.1352. Perfectly executed, and of course your order is going to here, and you have exactly all of the statistics regarding the trade. 1.1352, exactly what I wanted. I was lucky to get the price I really needed. And of course, what I can do next, as you can see, this is the market order, this is an instant order. You can place it straight on. So I can put my stop loss here, and I can put my take profit. So those two kinds of orders are for you, basically, to manage your trade. So of course, what stop loss, right? What is the stop loss? A stop loss is, as you can see, the kind of order that will protect this trade from unnecessary losses. As you can see, I got minus 100 pips. Stop loss, because stop loss is always below the trade for the buy position. And as you can see, estimated price of the stop loss is 1.1250 point something. I'm risking 1% of my balance, not even 1%, I guess, and that would be $100 of my account. It's a little bit more than $10,000. So which is why I'm saying it's not exactly to the pip 1%. So this is the stop loss. Of course, take profit is the opposite. It's going to be placed automatically. 100 pips. Take profit order 1.1449. Right now, this is my take profit. I will gain 1% of the account, and the equivalent in the US dollar is $100. So if you can click this, and your basically right now I have two orders. One is without the stop loss. One is with the stop loss and take profit. However, there is another way to do this kind of operation. So let's close this order, which is already in with the take profit and the stop loss. So let's say with the naked trade, right? We have it here. This is my 0.1% 0.1 lots trade, buy trade on the market. As you can see, we have something very, very nice, which is a trading from the screen. So what you can do from the screen or from the chart, what you can do if you want to move your take profit manually, for example, you can move it, of course, here. However, you can, for example, move it, let's say here. I'm just like I don't know, 301 pip away. I've just moved this line, and it says that the take profit position has been moved here. So it's already placed, and I can do the same thing with the stop loss. Let's say I will do the stop loss of 90 pips, let's say like somewhere around here. There you go. The stop loss of the position was successfully modified. Confirmation from the platform. That's easy. And this is it. If you want to place an order using the market order as a market order, instant order, that goes straight on to the market. Our market that we trade is, of course, British pound to American dollar, popularly called cable. Let me just take a look if everything is clear. Okay, no questions, no answers, everything is clear. Let me continue. So when we use the market order is being used when we want to trade immediately, because it will be placed instantly on the chart, right? On the chart, and of course on the market. So when do we use market orders? For any of your reason you might have, or any of the strategy you might use. If the strategy requires you to trade manually, placing the market orders, this is when you use it. So that's the situation when you want to do this. Let me just close this trade, and let me now explain to you the other order, which is the limit order. Why should we use the limit order? Well, the limit order is, of course, this kind of order that has a distinct advantage of the market order, and this advantage is that you will have a guaranteed price that you will put here for your limit order. And when you're using some kind of a strategy, let me just zoom out. This is what, okay, this is a daily, so this is 1 hour time frame chart. Okay, so when you're using the limit order, you can use, of course, sell limit, and you can use buy limit. So what is the difference and when you use it? Let me just explain it to you for a very, very simple strategy. And because I'm having this position here, for the purpose of this video, I'm going to close it. There you go. I've made some profits. It doesn't actually matter. What I want to show you is the clean chart for you to understand. Let's say what we want to do is we want to trade using the Fibonacci retracements. Okay, so what our strategy is, let's say this is just an example. Please remember, this is just an example, that our strategy is that this is this level here. Let me just put some line here for you guys to be much more clear of what is going on. Let's say horizontal line here, that this is the bottom. For any reason you might have, you can say, okay, this is the bottom of this market. Okay, this other line, let me just get it, horizontal line, this is the top. So you are bullish on this market, yeah, on the British pound to US dollar. You think that this, according to your strategy, this is the up move. And right now the market is doing the pullback or correction. Fine, very, very well. Okay, so basically what you want to do right now is to put some sort of the Fibonacci retracement line on the chart, because okay, maybe we will not. Okay, let's do the Fibonacci and then we'll do technical support and resistance. So what you do, usual stuff, you draw the Fibonacci level, or let me just draw it. Basically, I got 2 lines here, so it might be a little bit confusing. So this line here, as you can see, this is okay. Down once again, the Fibonacci retracement. Okay, now that's better. So this is, of course, our bottom still on, and let's move our Fibonacci. So you got this, and the top of the swing is here. Let me just zoom in for you guys to see much more clear. So what you want to do right now with your trading is to wait for the market to retrace 61%, which this is very common level for traders. What they want to do is basically to trade with the trend. The trend, in your opinion, in your strategy, is up. This is just a correction. So you wait the market to go to the level of 61%, and then for the market to reverse and go up. And this is how you use the limit order, because you want your trade to be placed here, 1.1327. This is exactly where the 61% of the retracement is. Okay, so what you do is very, very simple. You want to buy. Yes, you want to buy this price, exactly this price, and you want to be sure that you will be filled. So where you hit on the buy limit, you want 1.13, and you want to buy 1.13. Let me just put it manually. 20. Let's do the whole number, 27 and 6. Okay, this is your entry price. So so this is the buy limit price. The quantity is, let's say it will be 1 mini lot as usual. So 1 pip will be $1. And let's say you want this order to expire today in, let's say, hour and a half, not even hour and a half. Let's say 1 hour from now. If there you go, maybe 27. Okay, if the market won't go during the next hour, right, until 21 9 p.m. 27 minutes towards the 61%, this order will be gone, will be expired, as I said. Okay, so you got only, you don't have to do this, of course, this is optional. Okay, what do you want? You want a stop loss, of course, and let's say you want a stop loss in pips. So basically you won't spend more than 20 pips on this stop loss, and you got the calculations done here, right? And of course you want to take profit straight on, because if this market will go here and reverse, well, it would be nice to have at least 2-to-1 take profit. So you want 40 pips. Let's say you will do 60 pips. So now a risk to reward ratio is you're risking 20 pips to gain 60 pips. Very nice risk to reward ratio. Of course, the 60 pips is somewhere at the level of 1.1387. Yeah, 1.1387 is somewhere here, right? Somewhere in that zone. So actually, let's say this kind of a trade, according to your strategy, is okay. However, you want more than 3-to-1. Let's say you want 5-to-1. So you're risking 100. Sorry, you're risking 20 pips to gain 100 pips, and in that situation, 100 is of course 1.1427 and 6. 1.1427 and 6 is somewhere here. Okay, so let's say you're risking this. You want to gain 100 pips. You're risking only 20. Nothing wrong with that. Okay, as you can see, I've been talking for too long, so let's just switch to 20, 27, 28. There you go. I can still place my order. This was red. It means that yeah, there you go. I've been talking for too long. 20 to 9 o'clock, 9:30. There you go, 9:30 p.m. So place an order. If you place an order, you can see it here. This order is not on the market. This is a pending order, which means this is a buy limit order. And if during the next hour, market will hit the level of 1.1327.6, then this trade will get activated. It won't be pending anymore, and you will be in trade. You will trade 1 mini lot of the on the cable, risking 20 pips. This is your stop loss. Of course, you can modify it anytime. You can modify it now, for example. Yeah, there you go. It's modified, and as you can see right now, your stop loss is 97 pips. So this is no longer valid. This is because you moved your stop loss. Now this is what you are risking. You can let's say get it back to, now let's say you are risking again 20 pips, which is somewhere around here. There you go. It's back on 20 pips. So once you move this kind of a line, then of course you need to be aware of the fact that this is no longer valid for this trade because you modified it basically. Okay, so that's the limit order. The same situation and the same example can be used using the sell limit order, which is directly opposite to the buy limit. So what you want to do when you are trading the sell limit order, okay, is you want to put an order. For example, that's completely different example right now. Let me just cancel my pending order. There you go. I just click on it and it's gone. What you want to trade right now, let me just zoom out for a bit. What you want to trade right now, let's say Fibonacci is gone, is this level here. Maybe we'll add one more line because it's kind of far away. Let's say you are looking at this resistance right now. Okay, it used to be support, very nice. Now it's a resistance and it's located at 1.1428.6. basically this is your line. So how do you want to trade it? If the market would test this level from below, I mean, that will be some kind of a reversal. You want to short it because this is now the technical resistance level, right? You want to enter the market exactly at this place. So what do you want to do? You want to short it, which means you want to sell British pound to American dollar market. using the sell limit order. So this is the sell limit order. 1.1428 is the 1.1428, let's say, is the entry price. You still want to trade, let's say, okay, 1.2 lots. So this is 2 mini lots, and you will have the $2 per pip value. Okay, so every pip is $2. You don't want to expire this trade. It will go until you will basically cancel it or remove it from your trade watch here, which will be here. And of course, the stop loss is now minus 20 on this. Again, let's say you just want to risk 10 pips in case the market rally. You want to use only 10 pips stop loss, and you want to gain, let's say, 30 pips. I don't know, 30 or maybe, okay, 40 pips, let's say. Very nice risk to reward. You're risking 10 to gain 40. Very nice. Of course, all of the calculations were gone. Placing an order, as you can see, bang on, it's already on this line, and it's waiting. It's a pending order again. So this order is waiting to get activated. It might never be activated because you don't know where the market will go, do you? I don't know either. But just in case you went to bed, or you were away from the computer, or you lost your connection, or whatever, if you place this order, it will hang on here until you cancel it, or the stop loss will be hit, and then of course you're going to lose 10 pips, or you're going to lose $20 on this trade. Okay, is that clear? Is everything clear so far? Any questions so far? If you have any questions, just hit me with this. Okay, so this is the basic of using the trade. What's the difference then between limit and stop? Okay, as I said, limit is guaranteed price. Okay, limit is guaranteed price. You will be filled on this price you entered, 1.1428 or better, right? Or better price. So let me just remove this trade. There you go, it's gone. Let me just basically get rid of this line. If I am concerned, there is of course some kind of a there is the viewing options, and what I don't want to see are positions or orders. This is the orders and positions I want to see. The grid, no, we don't need the grid. What we don't want to see is of course okay, positions and orders stay here. Deal map, there you go. We don't want to see the deal map. So it's been gone. If you want to if you want to see it, you can always do this and then go to the sorry, I got my viewing options, and then of course you can put it back on like a deal map and the grid, but I don't use it anymore. So the third type of the orders is stop order. What's the difference? Why they made a stop order? Why is that for? How we should use it? Well, the stop order basically is quite different than the limit order, because it's being used during the different times of the market. Basically, the stop order is being used when your strategy, your approach to the market, or maybe, I don't know, your point of view indicate that it's good to use the market volatility. For example, let me give you the example here, historical example, when you could use this kind of a trade. Do you see this big green candle? Yeah, let me just zoom in. This is the perfect way to use the stop order. Yeah, you see this big candle here, and as you can see, this is the hourly time frame, 1 hour time frame. So that would be kind of difficult, and the precision of the entry wouldn't be that good if you use market order, right? In order to trade this green candle, which is a breakout from that consolidation here, what you need to use? You need to use buy stop order. And what your strategy is that if this the high of this candle, okay, if the high of this candle is taken out, so basically let me just move, let's say, this line, okay, we don't need it anymore. Let's say the high of this candle is, let's say it's 1.1351, okay. So your strategy is that you want to trade a breakout during the high volatility time or when the market is open, right? So when you want to trade this kind of a strategy, you need to have your order placed on 1.1351. Okay, so what you do, you click on the buy stop. You want to trade 1.13, let's say 51. Okay, and 1 minute lot, there you go. Okay, let's say 1 minute lot, no expiry. Right now, let's say the stop loss will be placed just below this level here, 1.1290. So 1.12 and 90 is the stop loss, minus 61 pips. Fine, all of the calculations are done, and your take profit is, let's say you're risking 61 pips, so you want to gain 122 pips. So it's 2 to 1, right? You're risking 61 pips in order to get 122 pips, right? So again, your strategy is that market has been trading inside of this consolidation for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 hours, right? And your strategy tells you, or your point of view, it tells you that if there is a breakout above 1.1351, which is the high of this trading range, you want to go long, okay? Which is why you place a buy stop order. So if the market goes here, already it's a history already, but it's a very good example, right? So if the market goes here, you want to be in the trade. You want to trade the long side. So this is why this is buy, and the stop is the kind of an order which refers very often to it works like a market order. So basically, when price, this kind of a setup here, this kind of an order is telling the trading platform and your broker that please open the buy order on entry level at 1.1351 as soon as the market will hit this order. This is what, and with the stop loss like this and take profit like this. Okay, this is what it tells your broker. And of course, in that situation, the stop order works as a market order, right? So right now, buy stop is of course pending order. Okay, the buy stop is a pending order, which means it's not activated straight on. It is waiting for the right price to come. It might never come. You don't know. If you have this kind of a chart, there you go. You never know. There is a green candle behind, right? The next I will be like this. So, but your strategy is, if the market will break this level, you want to be in. You want that trade. You want to buy cable, right? How much? 1 minute lot. Okay. So you place this order, and during the next hour, well, let's say, I don't know, you went jogging, you went to bed, something happened, you have a conversation, whatever reason is that you are not in the front of the monitor, of the laptop or mobile, whatever you choose. There's plenty of platforms to choose in TopFX. The market goes up, and as you can see, after 1 hour, this candle closed very, very high, around the level of 1.14, let's say 30 or something like this. So if you see this kind of a breakout and you are not in the trade, okay, you will see, oh pity, you missed that very nice setup up here, and it's a shame. It's too late to enter right now, right? So which is why, in order not to miss this kind of a trade, you want to make sure that breaking of 1.1351 will get you the trade. However, because the buy stop is the market order, it doesn't actually mean that you will get filled on this price. It might be a little bit worse, but not too much. Or of course, the execution price might be better. The reason for that is that it's very simple reason. This is very sudden, dynamic, aggressive move to the upside by bulls. Okay, so if you want to trade it using the buy stop, you need to know that there is no guarantee that you will be filled at 1.1351. Okay, because this market movement is very, 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 very aggressive, very dynamic. Okay, so before you will hit the button here by stop or like a market, before you hit the market order, okay, that might be milliseconds before your order will be filled, and the market might move already away from your entry price, which is why you use the buy stop. And you, of course, you really need to trade this kind of a position, right? Which is why you agree to use the buy stop at this position. Of course, very, 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 very often, almost always, you will be filled at the entry price, but it's not guaranteed. But very, 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 very often, you will be filled at the entry price or very, very similar price to the entry. To the entry price. Okay, the same situation is, but it's not guaranteed. Okay, the same situation is when you use the sell stop. Yeah, exactly. Let's say we got this range, and let's say you got the opposite point of view. You think that if the market breaks below, let's say, this is what you see on the chart, if the market will breaks below 1.1289, right? If market breaks below 1.1289, it will drop lower. So you want to sell once there is a breakout to the downside. Okay, how much you want to sell? 1 mini lot. Okay, not a problem. Stop loss will be placed, let's say, this time 50 pips away, so minus 50, and you want to gain again 100 pips, so you're risking 50 to gain 100, 2-to-1 risk to reward ratio. Very nice. And if you place this order, it will be a pending order waiting for the breakout to the downside. It might never come. Market might never ever come to your price. For example, market can keep trading like this for the next, I don't know, few hours, one day, maybe even few days. Who knows? Nobody knows, right? But you want to be prepared for the sudden move to the downside, and you want to join this move by using the sell stop order, which is why you place this order. Of course, you can play this, let's say, you can play it both ways, because you don't know where the market will go. So you can place, of course, sell stop below this level, and buy stop above this level, right? And then one of these levels will likely be triggered, right? So you will be either long or short if you don't know, if you don't have like a point of view of what market wants to do next. Okay, so that's the stop, sell stop. Yeah, that's the sell stop order. But what about the stop limit? Why they gave you, why the broker generally, and all of the guys that are thinking about what kind of orders the clients might use, the traders, the investors, the other guys that day traders, scalpers. It doesn't matter actually what kind of a trader you are. Why they would need stop limit? Let me explain it to you like that. If there is very, very busy, hectic time on the market, for example, non-farm payrolls, data release from the US, very busy, very busy. Some kind of central bank interest rate decision, or the central bank, let's say, press conference, right? The market goes up and down, it's very dynamic, in very aggressive way. Okay, so if you want to trade this event, of course you can use the market order, not a problem, but it's always a little bit more better, advanced, trying to find the right word here, but a little bit smarter or clever, actually to use a stop limit order. Because what you can gain here is very, very simple. As you can see, let's go back to the example, right? So let's go back to this level. Let's say this is the high. 1.13 and 50 is the entry price. What do you want to do is you want to again you want to buy the breakout of 1.13 and 50. So this is the price you want to enter. How much? Of course, the usual 1 mini lot. Not a problem, not a problem. So far, everything is clear. What about this limit range? So this here, quantity and entry price is clear. Limit range is the amount of the pips you want this order to be filled from the entry price. So that's your limit. Let's say you want this order to be filled only 2 pips away from the entry price. So you will be filled for sure. It's guaranteed. You will be filled on 1.1350, 1.1351, and 1.1352. You will not be filled at 1.1353 because it's out of the limit range. Okay, in that situation your order will not be activated for sure. Okay, and let's say that this order you want to trade, for example, this is just an educational example only. Let's say you want to trade the NFP payrolls during the first, I don't know, let's say 15 minutes of the NFP payrolls data release. So you put the correct date for the NFP payrolls. Let's say it's usually 2:30, so let's say it would be like 14:30, 14, let's say 15 minutes. It's 14:30 to 14:45. There you go. Let's say this Friday is the NFP Friday, so it's 11th of the November. It's a fake date. Of course, this is just for show. If you click here, of course, this order will go to the market right now. Okay, so you have to do it just before the NFP payroll. So, for example, 10 past 2 o'clock, or 15 past 2 o'clock, or 20 past 2 o'clock p.m. Okay, and then click the expire place order, and the order will be live. If you click it now, you will place order right now. Okay, so I will click it now, and this order will be active until 11th of November, 14:45. Okay, so we don't want to do this. We don't want to trade with this kind of a setup. Or of course you can just tick it out and don't use it. You got your stop loss, you got the take profit. I think it's obvious right now what they do. Let's say we don't use it anymore, and you put the place order, and the order is being placed. It's buy stop limit order, and what it tells your broker, what it tells your trading platform, basically it tells your trading platform to buy 1 mini lot on the entry price of 1.1350 with the limit of 2 pips only. As I said, if the price moves very, very, very quickly, because it's as I said, it might be some kind of very, 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 very dynamic event that will surprise the market participants, right? And you won't be able to basically enter it using the other, let's say, other types. And you basically know that you want to buy it. This is what it tells your trading platform to do. Basically, you either get me filled for sure in 2 pips range, or I don't want this trade. Okay, this is what it tells your trading platform. The same situation, but reversed 180 degrees, is for the sell stop limit. Okay, so what do we do? Let me just cancel that one. What do we do is we place the sell the stop limit, let's say on the level again. Let's switch our range back on. This is 1.2090, so this is 1.2090. sorry, 1.1290, of course. So you want to sell one mini lot of the British pound to American dollar at the entry price of 1.1290 with the limit range of, let's say, I don't know, 5 pips. So you will be filled at 1.1290, 1.1291, 1.1292, 1.1293, 1.1294, and 1.1295. You won't be filled at 1.1296. That's it. And you guaranteed that if there is a match for your order, so you are selling, so someone wants to buy 1.1 mini lot in that price range, you will get filled. It's guaranteed. So that's the difference, okay? And this is when you use this order, of course, for a breakout to the downside, because you are selling, so you want the market to go down. Apparently, as we can see, let's say this is of course just an example, historical example. Market went up, so nothing like this happened. So this is how you use, in what situation you should use market limit, stop, and stop limit orders in your trading. Basically, of course, those are the basic examples, and they can be, of course, modified according to your strategy. As you seen, I've been trying to show you the strategy based on the Fibonacci, for example, or strategy based on a breakout, a range breakout. But those strategies are just an example for the educational purposes only. And you, of course, can use these orders to fit your own strategy in order to trade more smarter, a little bit clever, and you will be, of course, because you are right now a little bit more experienced and a little bit more educated. Okay, so I hope everything is clear. Let me just switch to my webinar panel to see if there are any questions. I got 2 questions I can see. What's the difference between the limit and stop order? Because the explanation of both seems same. I think I've just said that, but I'm gonna repeat. Can you share recorded webinar for future reference? Right now, I can't really share it, but it might be posted somewhere, maybe on the social media or on the web page in the future. So okay, let me just delete this one. And there is, what's the difference between limit and stop order? Charles, can you tell me if you understand right now a little bit better what I just said between the limit and the stop order? Is that okay, or should I repeat it again? I need more explanation, please. Okay, let me just go back to the difference between limit and stop order. There you go. Let me just cancel it. Okay, Charles, here you go. This is the explanation for you. The difference between limit and stop order. Let me just go back to it. Where is my trading platform? Here you are. Okay. The limit order, okay, is the order you place on the market, okay, in 2 forms: sell limit and buy limit. The same situation is for the stop order: sell stop and buy stop. Okay, so far so good, no difference. Now the difference is, if you want to trade the breakout to the upside, okay, so for example, if you want to trade this candle, let's say again the historical example, if you want to trade this candle, you need a buy order. In order, the order you want to use is for this breakout to the upside is stop order, because this is a clear rising market. Yeah, it's a clearly rising market. You need to use buy stop order, and you need to place your order, let's say, at this level, horizontal line at the top of the range. Let me just move it here. Top of the range, 1.1350. Why? Why you want to trade it like this? Because your strategy or your point of view is telling you that there might be some sort of the breakout. Please remember that you place an order before this candle appeared, actually, okay? This is what you see on the chart. Buy stop is the order that tells your trading platform, buy 1 mini lot for the entry price of 1.1550, okay? No, let's make it as simple as it can get. No stop loss, no take profit. This is what it tells your platform. So if I will place an order right now, it's exactly what I've done. I've just told my platform to buy 1 mini lot of 113.50, and this is an hourly, 1 hour chart. Next hour comes in, and I got this candle. It means that my trade will be activated because I'm buying one breakout of 1.1350, and I will be in 1 hour, I will be in profit of all of that candle. So this is a buy stop. Now, what would happen if you place buy limit? Right? If you place the same situation, if you place a buy limit on the very same level, 1.1350, what's the entry? Because it's a, okay, let's say I need to get a little bit. You basically you can't if you place the buy limit at 1.1350, I can't do it right now because this is a historical example and the market is blocking me. So what you would do is basically you won't be able to do this, okay? Because this is it, even if the market would trigger your order, it will be the thing is that the current price right now, okay, the current price is 1.1340, and the buy limit is the order that you want to buy the dips. So buy limit is not being used to buy the breakouts. Buy limit is used to buy the dips. So the dip must be below the 1.1350, right? Your entry price must be below 1.13, and right now it's 1.5041. For example, 1.13 is already good because it's around here. And if you place buy limit, let's say no stop loss, no take profit, okay, if you place this order would give you, okay, would give you a better, let's say, entry. If of course we are still talking about this movement here. So you see here, you see this, okay, market is going down, you place a buy limit order, your order get filled, and then your entry price is even better because it's 1.13, so it's 50 pips better, and you already in the trade from the almost from the very bottom. So so if you want to buy the breakout, you place buy stop for the breakouts, and if you want to buy the dip, you place buy limit. That's the first difference, very important. And the second difference, buy limit is guaranteed to be filled on 1.13 only or better, okay, and buy stop is not guaranteed to be filled on 1.1350, right? This because this is that level here. So it might be let's say filled on 1.1351 with, but that's very rare. That's very rare for this kind of orders to get to be filled like this. However, you need to be aware of this fact. Most likely you will get filled in one trade out of the 1,000 trade. There might be kind of a little bit worse price than the entry price because you're using stop order. But in 999 examples, you will get the price you want. Like, and it will be exactly 1.1350. Okay, however, there is always a risk that there will be some slight price difference for the reasons I explained it area. So this is the buy stop difference, the second difference, right? So you need to be aware of this. The first and the second reason. I hope that I made it a little bit more clear, and everything is much more clear right now when we use the buy stop and the buy limit. And the same situation is for the sell stop, and of course for the sell limit. Yeah, it all depends on what do you want to trade. Basically, what is your point of view, what your strategy is telling you, and where is the price and what the market is doing. If there's a busy time of the day, if the market is calm, if the market is not calm at all. It all depends on this kind of a situation. So you need to choose your orders very, very carefully, which is why they have created the 4 different orders for your disposal, right? Market, limit, stop, and stop limit orders. Experienced traders use these orders accordingly to the market conditions. Let me just cancel all of this, and for the sake of the presentation, this is the last thing I'm going to do today. Let me just show you what I mean once again. Okay, how do we trade this? Let me just put it here. Let me just remove this line. There you go. So one more zoom out, zoom out, zoom out. There you go. Okay, and that goes. Okay, never mind. Again, if you want to trade the breakout of this high, you need to place the buy stop order, right? Because you want to buy and you want to buy stop pending order. So what you do, you go to the stop, you place buy stop. What you want to do is, that's the cross chart. There you go. This is a roughly, let's say 1.6. There you go, 1.16. So if you think the market will go up, you want to trade 1.16 and 01, and you place buy stop. And if the market will go up, your trade will be activated. Okay. This is the buy stop example of the buy stop. The opposite example. When do you use the when do you use the sell stop, for example, right? So you got the sell stop order right now. Let's say this low. You want to join the market, which is falling below this level. The level is I got my trading central on, so there's a target 1.1290. So 1.1290. Okay, 1 minute lot, exactly what I said. If market goes below this level, you will sell as well. So there you go. You place sell stop and you wait. You wait for this order to be filled. Okay. Let me just remove this orders from my screen, if this is possible. Okay. The other thing is, let's say you want to sell if the market goes to 1.16. Okay, so you place sell limit, you place 1.16 because you have a different strategy. There you go. You think that there won't be breakout, the market goes here and there will be reversal. So you need to sell this level, place an order, sell limit. The opposite side is of course the buy limit, and you think that the market will go that low to the level of 1.1290 and then it will bounce and go up. So what do you want to do? You want to buy this level. So this is again 1.1290, and there you go, and you place buy limit and it's here. So it all depends on what the market will do according to your strategy or point of view. This is how you place this kind of order. Of course, you can use the stop limit as well in that situation. In any of this situation, you can use the stop limit order as well. So that's the let's say real market educational example of how to use these orders to be much more clear. So I guess everything is right now much more clear, and we know when to use this kind of orders. Yes, thank you, Charles. Thank you very much. So this is what I wanted to tell you tonight. Basically, well, it's 9 o'clock p.m. And the next time we are going to take a look at some leverage things, and we are going to talk about the other features of the cTrader platform, which is Trading Central. And as you can see, I got some of the signals from the Trading Central today on my chart. So if you're curious about how do you trade this, how do you use it, how do you incorporate it in your trading strategy, basically join me for the third part of the webinar from the TopFX company. And of course, we are going to talk about it. I hope it will be much more clearer when we done this webinar next week. So next week, I guess it's Monday, the same time, 7 p.m. GMT, and you all guys are welcome. Please wait for the link to be sent to your email, so you can register and join the third part of the webinar. Become the cTrader Master. For today, thank you very much for this meeting with me. Thank you very much for your questions, for your participation, and I hope we will see each other next week. Have a nice evening or have a nice day wherever you are, and let me say bye-bye to you and see you next time. Bye-bye.